Welcome back to our financial mathematics series everyone. Today we are combining our all stock market knowledge into one big real world problem. A very warm welcome to Math Simplified by HM. If you find this lesson helpful, please like, subscribe, click the bell icon and share this video with your friends, colleagues and well-wishers. Alright, grab a notebook, pause whenever you need and let us get started. The life cycle of a trade, demystifying profit and loss in the share market. The scenario: buy and hold. Srimati Angadoshi purchased 22 shares of face value 100 for market value of rupees 660. Find the sum invested. After taking 20% dividend, she sold all the shares when market value was rupees 650. She paid 0.1% brokerage for each trading done. Find the percent of profit or loss in the share trading. Write your answer to the nearest integer. So, Srimati Angadoshi's starting position. Purchased 22 shares. Face value of each share is rupees 100. Market value of each share is rupees 660. Dividend declared 20%. The scenario: exit and objective. The transaction parameters: sold all shares at market value rupees 650. Brokerage fee 0.1% per trade. Objective: find the final percent profit or loss. Step 1: the hidden cost of buying. Brokerage applies to the market value MV. Brokerage is equal to 0.1% of 660. Therefore, brokerage per share is equal to rupees 0.66. Now, true cost per share. Base market value plus brokerage is equal to true cost per share. Therefore, 660 plus 0.66 gives us cost per share is equal to rupees 660.66. Total investment: 22 shares into rupees 660.66 gives us total investment is equal to rupees 14,534.52. Step 2: the reward of holding. Dividend is strictly calculated on face value, not on market value. Therefore, 20% on face value rupees 100 is equal to rupees 20 per share. Step 2 continued. Total dividend: 22 shares into rupees 20 gives us total dividend is equal to rupees 440. That is, money comes in. Step 3: the exit strategy. Brokerage applies again to the new market value. Brokerage is equal to 0.1% of 650. Brokerage is equal to rupees 0.65 per share. Step 3: true selling price. Base market value minus brokerage is equal to selling price gives us 650 minus 0.65 gives final selling price per share rupees 649.35. Now total selling amount: 22 shares into rupees 649.35 gives us total selling amount is equal to rupees 14,285.70. This money comes in. Now step 4: pooling the income. Now total selling amount plus total dividend gives us rupees 14,285.70 plus 440 gives final total income is equal to rupees 14,725.70. Now step 4 continued. The absolute profit. Total income minus total investment gives us 14,725.70 minus 14,534.52. gives final profit is equal to rupees 191.18. As we have asked profit percentage, we use the formula to calculate it. We know that profit upon investment into 100 gives us the profit percent. Therefore, 191.18 upon 14,534.52 into 100 gives us 1.315%. Therefore, profit is equal to 1%, nearest integer. And that is how we calculate the net profit percentage. Before we leave, let us reflect on the powerful thought: in finance, as in life, it is not about how you start, but how you manage the journey to the end. Mastering every single step, formula, and brokerage fee in this complex problem is what leads to a successful mathematical outcome. Was anything confusing? Please comment down below with any queries or drop a comment with suggestion for improvement. Please take a moment to like this video, share it with your friends, colleagues and well-wishers. Subscribe and hit the bell icon to never miss an update. Thank you all for your fantastic focus today. Enjoy the great time and look forward to seeing you in our next session.